Good morning, traders. Today is Thursday, December 1st. My name is Charles, and this is the Pirate Traders live stream. All right, well, the question of the day, the big question that we're all wondering this morning, is this the beginning of the Santa Claus rally? The market often pumps in the weeks leading up to Christmas. Is that going to happen this year? Well, the place where the market opened this morning is perfectly set up for exactly that thing to happen. Okay? The major downtrend that has been holding the S&P 500 down since the all-time high is now being tested. It's worth noting the last two times we tested it, it got smacked way down. I mean, big, voracious, harsh slaps down from this level. So essentially today, what we're asking ourselves is the market looking to build support up here and maintain this breakout? So are they looking to either go sideways or try to get continuation higher from here? Or are they going to get smacked down once again, like they did, on the previous attempts? If we don't get smacked down today, it will likely lead to excess to the upside, as both the fact that we just broke out of yesterday was a breakout of about a 10-day balance. You're not going to have just 1 day of excess out of 10 days of balance, right? Look at this. You had, not quite as many days, but quite a few days of balance. And then look at that, straight upward momentum for 5 days. You had all these days of balance here. You broke out, straight momentum lower for 4 days. Okay? This is what happens. You have the markets going sideways for 5 or 6 days, straight momentum higher for 5 or 6 days. On and on it goes. It is not common to spend a long amount of time balancing around in an area and not get excess out of that balance, not get a bigger move. So the potential for a move higher here is definitely in the market. That is my number one focus this morning. So what am I looking at for that focus? Well, my main level that I'm paying attention to is 40.35. That is the balance area high. Okay. And the reason is because just above it at 40.44 is the base of the spike from yesterday. So the spike up at the end of the day yesterday told us there was still momentum in the market. The gap up this morning was a sign that there is still momentum in the market. So now the only thing I need is confirmation of that momentum, which I would judge as a gap and go. What is a gap and go? I think we're looking at it. Sorry, I was a bit late getting started this morning. So a gap and go is when the market opens and it tries to fill the gap, but it can't quite get all the way to yesterday's high. When it finds support and heads back up through the opening price, which, like I said, it literally just did it, that is a sign it is trying to keep going. That is an attempt at a gap and go. So now the question becomes, can they make it work? Can they hold it? And ideally, what we would want to see is for the market to find support above the opening price. So they're not doing that yet. So it's a little bit bullish that we gapped up. It's a little bit bullish that we still have the gap, but it's not a gap and go yet. Because to be a gap and go, they would have needed to push back through the open and find support up here. So first order of business is trying to fill the gap. Can we get to yesterday's high, 40.83? And when we get there, do we find support? Support at yesterday's high is bullish for continuation higher. If support at yesterday's high breaks and the market starts to pull back, I would look to test the overnight low, which is at 40.71. So if the high from yesterday at 40.83 breaks, I'm looking for the market to come down and test that overnight low. If we could just dip below there and then pull right back up. If not, if we dip below there and get more new selling, we're looking to test the base of the spike up. This area in here, the base of the spike and the previous balance area high, so call it anywhere between like 40.35 and 40.45. This area in here, this will be the make it or break it level. If they are going to get that larger breakout that we just talked about on the daily, okay, if they're going to get this bigger move out of here, they need to find support on that balance area high today. If they start to pull back down into balance, we know we've got rejected once again off of this resistance. So that is the key level to watch. Okay. So it's pretty simple. If they can keep the momentum going, they can keep the momentum going. They can test that overnight high and just keep on pumping. If they come down to test yesterday's high, they can find support at yesterday's high. If they do, it can just keep on pumping. If they don't, we're watching the base of those spikes for support. Let's see what the market has in store. Oh, it is also worth noting the overnight filled the gap, but the regular trading hours did not. So we still have a little bit of gap above. So we've got old gap above in need of backfilling and current gap below in need of backfilling. Michael says, what do you think of a possible pullback to last week's high? I don't really look at weekly candles. I can take a look at it. Yeah, last week's high is yeah, last week's high is very doable, and we could still get a breakout. So I have it at 48. We could definitely, that's basically the base of the single prints. I'm sorry, the base of the spike up from yesterday. So we could easily poke down, find support there, and then get the bigger move. Very possible. As far as the probability of it, I cannot tell you. I can tell you right now, the market is extremely bullish. We had a spike up yesterday. We closed at the high. We have a gap up this morning, and so far it's a gap and go. So all of those things are very, very bullish. I would certainly not be looking for a trade short right now. I would really be looking for the short if that level failed. Does that make sense? So I'm not trying to get in a trade from here to here, because the market can find support anywhere in here and turn around and go back up. But if it fails to find support in here, then I'm definitely in the short to head back down to the opposite end of balance. And I'm in it with much more confidence because of the rejection of that trend line. But right now, there's no reason to assume that's what's going to happen. The market-generated information is saying the more likely scenario is a breakout, is continuation higher. And that's what the spike told us, and that's what the gap is telling us. So until we fill the gap and don't find support, or fill back to the base of those single prints and don't find support, we assume that the bulls are in charge. Michael says yesterday's high was 40.93. Agree to disagree, sir. I consider the high at 4 p.m. when the closing bell rings. I don't include that that runoff period. And the reason is because I have found, for this exact reason, for gaps, it is significantly more reliable to use the high that's created at 4 p.m. rather than afterward. So basically, if they were to find support at the high created in the 15-minute runoff period, it would be a gap and go. I'd be bullish. But I wouldn't be bearish if it dipped a little bit below, right? Because it could still be a gap and go. That's why I use this high. We got 150 people hanging out. 60 likes. Please smash that like button. I sure would appreciate it. RK building resistance at 4,100. Yes, bear bias, still short. I mean, if you're a bear, today is your last day, right? Whatever happens today will tell you if you're right or wrong. This is going to be a very important level, guys. Make no mistake about it. The whole world is looking at this trend line. This is trading 101. You don't have to know anything about TA to understand a trend like that. That is that crystal clear. So if they're able to stay above there, if by the time we close today, we're up here in this area, this sucker's either going sideways or higher with very, very high probability. But of course, if it rejects today, well, then you are beautifully positioned as a bear for another one of these. I mean, this market could just absolutely shit the bed if it rejects off this trend line again. But I would just say, if we're still up here tomorrow, be willing to change your mind. Nap news at 9:45 and 10. Thanks for the heads up. John Doe, I missed the book club. Has it been recorded and can I watch it again? Yes, sir. It'll be up probably tomorrow-ish. I recorded it, so I just got to upload it. That was, however, the last book club meeting. For those of you that weren't at the book club yesterday, I've basically decided I'm no longer going to continue the book club moving forward. It just is it's a bunch of extra work for me for no reason. There's only like 4 or 5 people that show up. I know you guys like to go back and watch the videos later, but if I wanted to make content like that, if I wanted to make video content that you go back and watch later, I would just make videos and I would do it way better than a lecture style video that we had from the book club. So I'm not going to keep doing the book club. If there's anybody out there who's listening to this who wants to take up the mantle, you think it's a good idea, you think there are traders who like to talk about books and will want to get together, I'm happy to hand the reins over to someone else. And I'll, run the website and the newsletter and stuff for you if you want. But I don't want to continue to do the project. It doesn't feel like it's worth it for me. So that was likely the last book club we'll ever have. Screwball, why did the market rally yesterday exactly at the moment when Powell was scheduled to speak, but he hadn't actually started speaking? Yeah, that's something we talked about in book club. Dude, I'm in full-on conspiracy theory mode with that one yesterday. I don't care if you want to judge me for it, okay? Judge me. I think that whole thing was manipulated. Go back and watch the video that I made about Paul Tudor Jones, which is on the homepage of the YouTube channel. And you'll see there's a part in that video where every morning before he starts trading, he jumps on the phone with other hedge fund managers and he talks about what they're going to do. He talks about the plan for the day. And there's a scene in that where he says to this other hedge fund manager, I'm bullish on stocks. And the other hedge fund manager says, I'm bullish on them too. But I think you're going to have to get there by looking like shit most of the day. Right? So ahead of time, he's basically one hedge fund manager is basically telling another hedge fund manager, yes, you want to get long the market. Yes, the market's going to go higher, but you're going to look like shit all day. It's going to be going against you all day long, but that's fine. You just keep getting long. By the end of the day, you will be rewarded for it. That's essentially the signal that he was sending there in saying, I'm bullish too, but you're going to have to look like shit most of the day. So what I believe happened yesterday, quite literally, is I think, earlier on last week when we were up here at these prices, I think the powers that be decided that they were going to take the market higher, or at least bring it back to here after the Fed notes came out. So they pushed the market lower, accumulated in here. It's because of the way that the market traded over this period. So it broke the balance area high and headed down towards the opposite end of balance. But then it just rotated and rotated and rotated and rotated right there on the balance area low. Now, this could be normal behavior. The push from balance area high to balance area low is normal. And rotation in a certain area, bouncing around sideways, waiting for new information, totally normal, right? So up till now, nothing about this seems suspicious in any way, shape, or form. You know, the market ran out of steam up here, pulled back, and now somebody's accumulating down here. Somebody's getting long, preparing for what's going to happen. But then where it gets tricky and where I start to get conspiracy theory-esque is the fact that the move yesterday higher started right at the second that the 1:30 bell rang. I'm talking about the ringing of the bell. Even if a computer was reading his notes and making a decision based on that, it would at least take one whole second to read the paper and make the decision. This literally happened the moment the clock struck. The market pushed like 10 points higher out of nowhere, and it never came down again. It literally pushed higher, went sideways, pushed higher, went sideways, pushed higher, went sideways the whole freaking day. Now, have I seen that before when Powell was speaking? Yes, I have seen that before. It's not like it's that unusual, but the reason that it moved like that, the reason it pushed 10 points higher and then it just went sideways, pushed 10 points higher, just went sideways and kept doing that the whole time was because it was all short covering. All of that. Every single bit of the momentum yesterday wasn't from the fact that something that Powell said was so bullish that everybody was like, oh my God, can you believe he just said that? That's so bullish. The market should go up. Nope. He didn't say a single thing that changed anything. Nothing he said changed, yet the market moved, 150 points. Why did it do that? Or sorry, it moved like 50 points. Why did the market do that? Because it was manipulated. Because they pulled it down, not thinking the market needed to go lower. They thought this was a fair price to do business up here. But they pulled it down knowing that Papa Powell was speaking yesterday. And knowing if they could bring it to the balance area low and hold it there, that they could shoot it through short covering right back up to the opposite end. And that's what happened yesterday. It also seems, I hate to say it, it also seems very interesting that we are at the most key important level we could possibly be at. The next test of this major downtrend right on December 1st. So the people who are accumulating options today, planning for, or were accumulating last week, planning for what's going to happen this month, it's going to make a huge move one way or another. And they are set up to make a killing. Which side? Who knows? Who knows? But boy, are they beautifully positioned. All right. Well, I am bullish for gap and go. They had their chance to fill the gap and they couldn't do it. That means there are new buyers in the market. Those new buyers are looking to fill the gap left behind from the 12th to 41.04 and then test the overnight high. So once we get up there and we poke above that overnight high, we've gotten rid of this magnet that's pulling on price, and we're giving people a great location to take profits. So we need to see new business up here, new buyers to look for continuation higher from there. There is, of course, a chance they may just poke up and then pull right back down. Screwball, if people are accumulating options, the market won't move anywhere. Yeah, but even if the market, like I said, the only thing that matters to me right now, not intraday, but bigger picture, is staying above this level, staying above the previous balance area high, basically the base of the spikes from yesterday. So even if all we did was go sideways today, I would still see that as incredibly bullish, that we have momentum, bigger picture. If they're going to reject, I mean, let's just go back and look at that. They do not spend time hanging out on this downtrend. They spent 2 days testing it here, but literally only 1 day, 1 day, one tiny little poke up here. So if we're going to get another one of these, they should instantly pull back down. So if we can hang out up here for a day, even if we just go sideways, that is bullish to me. So we'll have to see what happens. Okay, so that is a repair of a backfill of the previous gap, and it has created a weak high. So we are still looking for continuation. Greg says, market operates in microseconds. A microsecond is 1,000 milliseconds. The eye blink is 200 milliseconds. Thinking that algos don't have enough time is not correct. Let me try to put this to you another way, Greg, since you're having such a hard time grasping what I'm saying here. I've watched the chairman of the Federal Reserve make statements like that 50 times. Okay? I've never seen what happened yesterday happen before. 0% of those times has that ever happened before. Never once have the algos been able to read and react and be right. That's the important thing. Is it common for the market, right at 130 to make a big move one direction? Of course not. That always happens. That's fine. But what it does is it makes a big move and then it retraces, right? That's what never happened. That's what I'm trying to tell you. The fact that the market was sitting somewhere at 129, and when the clock strikes 130, it started going higher and it never stopped right up to the close. It never pulled back. That is not normal behavior. I'm sorry. Even on FOMC, even with computers trading in a fraction of a second, I've watched it enough times to know 0 pullbacks is manipulated. The market cannot go up in a straight line nonstop like that. The only way it can go straight up in a line like that is if the people who were buying down here took 0 profits, right? No profit taking from any of these buyers. The only momentum yesterday was people who had sold getting out of their shorts. That's what this move was, at least the first chunk of it. Obviously, as time goes on, you convince more and more people. And then, I would say the second half was legitimate buying, which was really just people being surprised and changing their minds and getting long. But this first move up was manipulated. Like freaking clockwork. And if you disagree with me, that's fine. But I still believe what I believe. And that's, by the way, I'm not mad about it. That's fine. Go back and watch the first 5 minutes of yesterday's stream. I said, we're going to hang around here until the news comes out, and then we're either heading up to the balance area high or we're breaking lower, right? So it's not like the market being manipulated means you can't predict what's going to happen. But the bitch of it is, it makes it hard to trade it, right? I was looking for that long trade. All I was waiting for was just one pullback. Any one pullback, and I would have been in that whole fucking move. But they didn't give it to me because it was manipulated. It wasn't natural. And so that's the thing I'm frustrated about. They literally could have pulled back, by the way, for a second. They could have pulled back for literally 1 second. I would have been in that trade. I was finger on the trigger ready. But instead, I had to just catch little tiny scalps along the way because I missed the entry where I should have got it. Those bastards. Screwball, so much resistance on the book map, but we know what that is, right? We've seen this game before. They put that iceberg there to convince people that the high of the day is in. So they'll short down here. And where are they going to put their stops? Right up there. So right now they're convincing people, ooh, this market's going to go lower. And they're just building up, and there you go. And then they come back and take out the stops. This must be news related. So there you go. Wait, we just saw it. So where's Greg? So Greg, what did it just do? The news came out. We were down. We were here. It pushed up. And then what did it immediately do? It came right back down. That's how news bots do it. It's a reaction, and then they cool off and they come back. And then we find out how the real market wants to react to the news. That's what was so weird about yesterday. The timing of it and the fact that it never, ever came back down. Okay, well, this is obviously a change in the market. So now we've repaired that weak high. Okay, so we took that magnet away. that was pulling on the market. We've now looked above the overnight range and failed, pulled back in. So that's a little bit bearish, right? We've lost some of the bullish momentum, and we've given ourselves a first bearish signal that we've got in the day. Obviously, we are still bullish as long as we are above yesterday's high. But if we start to pull back down into yesterday's range, I'll be back to neutral once again. However, I do think there will be support here on the gap fill. And Scuba, like we were just talking about a second ago, they put those icebergs in to build up the stops, and then look what they got themselves, 1,000 contracts. Market says, thank you, traders. May I have another? And then it builds up an iceberg right here to get the stops down here. And then it does it to them there. And then it goes back and forth all day, every day, baby. Wherever you see a big iceberg, assume there's a lot of stops on the other side of it. Or another way to phrase it, weak references need to be repaired. Michael, can you explain a weak high or low? Yeah, so a reference is considered weak if it is less than a point away from another important reference. So, for example, here today, The high earlier in the A period was weak because it stopped exactly at the high from yesterday, or sorry, from the overnight. So that is one way that we mark references as weak at the high or the low. The other way is if it is only one side of the market. So we can see here, there were only 6 contracts that traded at the low, and they were all buyers. So no one got a chance to sell down here. That means there is still liquidity waiting to sell down here. And the market is often looking for liquidity. That's what it's doing. When it's going up and down throughout the day, it's just looking for wherever there's somebody willing to do business. So when we see the market pull down here, and it was nothing but buyers who got a chance to do business here, we just assume the market must need to come down here again so that whoever wants to sell here will get a chance to do some business. So that's what makes this particular one weak. And all a weak reference means is there's slightly higher probability that the market will come back and take it out. Just like I was saying with the A period, right before that news came out, right? We had that iceberg that was just holding the market down, right? And Scooball said, wow, a lot of selling on the, and then I said, yeah, but we know what they're doing. We know that they're creating that weak reference to trick the traders. And then boom, those 1,000 contracts, those are those traders that got tricked. Okay. So there you go. There's the repair of the weak low. But now that it's repaired, boom, boom, that magnet that was pulling on price is gone. All right, moment of truth here. We're about to test yesterday's high, 40.8350. Can it hold as support? If it does, that is extremely bullish, as it is what we call a gap and go. And it's a good gap and go. It's one where the strong hand buyers had a chance to get in. So I remain bullish as long as we are above yesterday's range. Mike, what platform am I using for TPOs? It's called Window Trader. There's a link in the description below. Was there some relevant news? Yeah, we had some news come out at 10. Oh, yeah, it's the manufacturing PMI. They were expecting 49.7, but it was 49.0. So, you know. Seven-mile reach. Did yesterday have a range, or was it just up, 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 up? Yeah, it was just up, 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 up. It was balancing, then it started trending, and it never came back. Okay, so there's the gap filled. Here's where we'd like to see buyers starting to step in. We're looking for them to hold those ticks above the zero line. Can they do it? No, sir. So no support at yesterday's high means we do not have a gap and go. So I am back to neutral. As I said, I'm not really bearish until we break the base of the spike from yesterday. But if we push below the overnight low and find resistance there, if we push below 72 and we find resistance there, then you could look for a trade to fill the base of the spike. It's not a trade I would personally be interested in. I'd rather wait for the market to trade down, figure out where it finds support, and then go long from there. But getting below the overnight low and finding resistance now would be bearish to at least go test the base of that spike at 40.45. Okay, so now we're testing that overnight low. Do we get more sellers? Anthony, today and yesterday looks like a penny stock pump and dump. I know, it's crazy, isn't it? Especially when you think about the fact that to make that move yesterday, they had to move trillions with a T, trillions of dollars of capital. Stocks, bonds, options, futures, everything. Just money just flying around. All right, well, that is new selling below the overnight low, which is bearish. So now we have to play the game of where will the market find support? It can do so anywhere inside this spike and get bullish very quickly. So the first support I see is right here around 66. Then 60. 53, 50, and then 47. Charles, you crazy. You're telling me any one of those could be the level the market reverses and starts heading higher? Yes, sir. That's why it's much harder to short on the way down, not knowing where you can take profits, as opposed to waiting for it to get whatever move it's going to get and find support, and then getting into the long where you know exactly where to put your stop and your profits are much bigger. But yeah, the market could find support anywhere in here and reverse. Jose, appreciate you, brother. Thank you. Screwball retracing of the big move at the news the next day. We saw it before, pump and dump. Yeah, I'll just continue to keep reiterating this point. It's not bearish until we break the base of the spike yesterday. As far as retracing, we haven't even retraced the last hour of yesterday. So let's not worry about completely retracing yesterday until we've at least retraced the last hour. These were all new buyers at the end of the day that were willing to take on risk, probably to head up and test that trend line. But they haven't quit yet. They have not been squeezed. They are still in the market. So there are still buyers in the market. However, once 44 breaks, then I'll get bearish AF, because then we can look at it as a failure of that larger downtrend on the daily. Once we get back into balance here, then we know, okay, this was just a rejection of the downtrend. And then we can have one of these. Lots and lots and lots of money to be made to the downside. But let's just first wait for confirmation that that's what's happening. John Q. Jokes on the market. I've been live since 2011. That's the way I feel about Bitcoin. Like, everybody talks about Bitcoin, but it's like most of the Bitcoin I own to this day, I still bought for less than 10,000. So it's like I could have another 50% drop and still be profitable. Who cares? But we're day traders here, so we're not thinking long term like that. Have I talked about today's internals? Not really, actually. NQ is testing that 20 moving average on the 15-minute candles right now for support. Nowhere near it on the ES. The breadth isn't really telling us anything. The advancers versus decliners are now becoming bearish. They've begun to trend lower and they're below the zero line. So if they can keep that trend going lower and stay below the zero line, that would be bearish. And same thing with the ticks. Up until about, 15 minutes ago, they were neutral, just kind of bouncing around, holding support at the zero line. Now that that zero line has broken, the momentum has begun to the downside. So can they keep those ticks trending lower and keep them below the zero line? To be totally honest with you, I don't think the internals will be super reliable until we break the base of that spike. These areas right here that we're in, I've just seen this so many times. It's a really hard thing. You just can't guess when it's going to stop and reverse in here. The only thing you know is that if it doesn't stop and reverse by the time it gets to here, it's going to go lower. But where it could flip and reverse from here and how violently it could do it, it's literally a guess. And what will happen is you'll just get one giant green tick and it'll totally change everything. And then you'll be like, well, fuck, I was watching the ticks and they were trending low. You know what I mean? So it's like right now I'm focused on price action. Can we find support inside the spike? That's the only question on my mind. I don't care about Bookmap. I don't care about the internals. I don't care about the daily. I don't care about anything right now other than can we find support above the base of the spike? That's it. If we can, I'm bullish. If I'm bullish, I'm long. If not, I'm flat, waiting for a chance to get short after we break. Keeping it simple. Another example, if you're trying to wrap your mind around what's happening right now, is just look at the last time we had one of these crazy spikes from a few weeks ago. Boom, boom. So same thing. We had the massive move up, close in the spike. The next day, we did not find support, at the high. We didn't have a gap and go, but we also didn't break the spike. We came down, tested the base of the spike, and then boom, went up from there. So that's the narrative I'm playing right now. As long as we can stay in that spike, a little pullback is just giving stronger hands a chance to get in. But the momentum is still there. So that's what I'm waiting for. I'm waiting for proof the momentum is gone. Then I become bearish. How did I mark 40.45? That is what we call the spike up, which was the new move the market made in the last hour of the day. So if you're new, this is going to be way too complicated. Don't try to learn too much all at once. But basically, the last hour of the day and the first hour of the day are their own market doing their own thing. So if the market spikes up at the end of the day, if the last hour of the day is the market going higher, that's bullish. It's new buyers coming in. And so until those new buyers get squeezed, until they change their mind, they were bullish yesterday, until they are no longer bullish, until they decide to become bearish, the momentum is still there. It's still in the market. So that's where I get this level. This is the level where the market generated information is telling me we've run out of steam. We can't go any higher. But until then, the market generated information right now is telling me not only can we go higher, that is likely what the market wants to do. It just hasn't found enough buyers yet. So it'll pull back a little more. Is that enough buyers? All right, we'll try a little more. Is that enough buyers? Okay, a little more. And it'll keep going till it gets enough buyers. But it could get enough anywhere above the base of that spike. Any of these levels could be the magic spot where the momentum starts again. So that's what I'm waiting for. All right, well, there you go. The market is now one-time framing to the downside, which is bearish. I again will say, I am never going to tell you all not to take a trade. If you want to short this, you've got plenty of reasons to do it, right? You got the market now trending lower. You got the failure of the gap and go. You got your next major support all the way down there at 45, which is like 10 points lower. If you wanted to take a short here, you totally could. But I am not interested in that because I have seen this movie before. I know how it ends, and it often ends in an instant and violent reversal to the upside as long as we stay above that spike. Okay, I've seen it so many times before where everyone thinks if they don't instantly get a gap and go, that it means the market isn't bullish today. And so they all change their mind and get short. And what's the problem with that? Once everyone's short, there's no one left to sell. And then as soon as that last seller gets in the market, what does it start to do? It starts to turn around and go back up. So they make you think they're going to take the market lower today. And then once they reverse it, all these sellers are screwed. And just boop, 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 short covering. We get a massive move to the upside. The massive move starts to bring in new buyers. And all of a sudden, we're back at the highs. Okay? I've seen it happen time and time and time again. So to me, this is a market to step aside and wait for a better opportunity. Lots of opportunity to go short once the base of the spike fails. If you want to take the market lower. Okay? Plenty of money to be made from here to here. No reason to guess up here, in my opinion, the way I trade. But like I said, there is enough market-generated information. If you wanted to be short this trend, you could. You know, you got a lot of thin volume below. There is a chance that we're going to pull back some of this range today. So if you wanted to get short, you could, but it's not a trade that interests me. With that, I shall say goodbye, farewell, au revoir, and wish you all the best on this Thursday. Members of the brigade, let's ride.